Well, welcome to another episode of the AgCulture Podcast. So we're right in the middle of tax season, which means every farm owner, every ag business operator, every startup founder is thinking about the same thing right now. Taxes, we all love it. What do we owe? What did we miss? What should have we been planning for last year? And I'll be honest, taxes aren't the most exciting topic, but we all love cash flow. So making sure you're not overlooking something that was designed to support that really matters. And today we're going to talk about one of those topics. We're talking about research and development tax credits. Now, if you're a farmer listening, don't tune out because that sounds like something Silicon Valley only can do. Agriculture experiments all the time. Farmers are always experimenting, but we don't usually call it R&D. Just want to give a quick disclaimer here. I'm not giving anyone specific tax advice today, so I'm not your CPA. Don't give me calls about, hey, you told me to do this and that with my taxes. We're just going to have a great conversation. I'm going to share my experience about going through this process on our farm. And Louie Pitman and Sid Speir are here to explain how this credit works and how it can work for your operation. So today's goal is very simple. If you're experimenting, whether it is with feed trials or automation or genetics or software development, we want you to at least understand and know what questions to ask. So Louie, let's start at the beginning. Welcome to both of you on the show. Could you please just start out, give us a little background of R&D Tax Credits, R&K Partners, which you guys are both with, and why this tax credit exists?
Absolutely. Firstly, thanks for having us on, Paul. It's been great working with you over the years, and I know we've had this conversation a few times about when we was going to jump on, so glad we finally pulled the trigger and excited to chat with you this morning. So one of the biggest misconceptions, like you said, is in agriculture today, a lot of people think that research and development is only for tech companies in Silicon Valley, like you said. The reality is that farmers and livestock producers have been doing research and development for a long time before it was even a term. So hopefully today we can demystify and shed a bit of light on these credits within agriculture and how they can be relevant to certain businesses. And a bit more about us and what we're doing in the market. RK Partners, so we're a research and development tax credit consultancy. So we're not a CPA. We only specialize in these R&D credits. We work alongside a lot of the biggest CPAs in ag as an extension of their services. And our job is to really understand our clients, the activity that they're doing and vetting whether it meets the guidelines for the tax code when it comes to these credits.
So Louie, could you explain to us why research and development tax credits actually exist?
Absolutely, and great question, Paul. So R&D tax credits exist because innovation and research and development is risky and it comes at a cost. And when businesses are looking at ways to improve a product or a biological outcome, or looking at ways to improve the health of the animal or the quality of the produce, then these things can, come at a risk and sometimes go wrong. And the government understand that. And this is to drive those kind of projects, drive that kind of innovation and reward businesses for being involved in them. It's not just limited to the United States. So almost every established economy within the world has their own R&D credit. The UK, Canada, Australia, France, Germany, and it's all to stimulate that kind of activity and that kind of investment within the economy. And innovation leads to higher productivity, it leads to better jobs, it leads to stronger exports. And these are things which each government wants to promote.
Yeah, so they're looking at this as a way to expand and develop their economies. And that's why they're doing it.
Absolutely.
Now, Sid, I want to give you a chance to talk here about a little bit more specifics of what were the topic of the day, research and development tax credits. Can you walk us through, the IRS probably has lots of rules around this, but what are I think there's 4 main parts of the test to figure out if what you're actually doing would qualify, whether that be on a farming operation or in an ag business startup.
Yeah, absolutely. I can touch on that. And I'll kind of cover the wide range of agricultural clients. We work in dairy, we work with sow farms, wean to finishing, we work with layers, we work with all different kinds of ag, and each one can qualify. And I'll kind of try to touch on how they meet the requirements super fast here with the 4-part test. So 4-part test is in the tax code. It's essentially the initial criteria that's used to determine whether or not a grouping or a bucket of activities can be qualified. Now, if that bucket of activities is qualified, then these farmers are going to be able to kind of benefit from some costs that they're already incurring as it relates to feed, as it relates to veterinary payments, as it relates to genetics, as it relates to on-farm employees and some of their time. So the first requirement is a product. The taxpayer needs to be producing some kind of a product. So in the case of a dairy farm, that's going to be milk, of course. In the case of a layer farm, that's going to be eggs. In the case of a wean to finish farm, that's going to be the pig itself, right? So that's kind of step one. Step two is that the taxpayer needs to be using principles of biological, more physical sciences, and they need to be using those principles whenever they're trying to answer one of two questions. First question is, how can we do this? And the second question is, can we do this? And a lot of the nutritionists and farmers that we've spoken to over the years, we found that they're constantly trying to answer one of those two questions as it relates to their general operations and their general course of business. On the surface, and obviously there's a lot of ag listeners here, so everyone here is going to kind of know this already. But for people that aren't in the industry, actually, it may seem very simple on the surface, right? You take food, you feed the food to the animals, and the animals grow, or the chickens lay eggs, right? Everybody here knows that's actually not as simple as that, right? There's a lot of technical work that goes in. That's why most of the farms we work with have PhDs, nutritionists, entire companies working with them and trying to help them figure out how to improve their yields, and how to keep their animals healthy, and how to keep disease away. And we found that most of the clients that we work with are constantly testing different feed products, feeds, additives, different ingredients, right? There's regional differences. Some animals are going to get hit with certain diseases in the Northwest compared to the Northeast, right? So all of these things are constantly changing. And the credit, what it does is that it rewards companies for grappling with these issues, grappling with these problems, and trying to prove the well-being of their animals and the products that they're selling that we all rely on each day when we go to the stores. Yeah, great place to work in for sure. And we find that most clients that we work with are kind of constantly tackling these challenges.
Oh, that's great explanation there. Let's dive a little bit deeper into the detail and make it a little more practical. Could you give us, maybe on a dairy farm, since we have a lot of dairy listeners, what would be a legitimate qualifying activity that you would see on a dairy farm? And also, what separates routine farm management from that structured experimentation?
Fantastic question. And something I want to add into is that all of this just has to be new to the farmer, not new to the world. And that's actually something that I think is going to help a lot of the listeners too. And this is here's a practical example. Let's say that you want to improve rumen function in your herd, right? And there's a new product that you haven't tried before, and you test that product on your farm, right? A listener here may think, well, the product was already made. That's where the R&D is. What we've learned is that there's specific technical differences whenever you apply these products at the farm level. So a practical example is going to be trying out a new product to improve rumen function and maybe testing that product on your herd at different inclusion rates. That's going to count as experimental. And due to the fact that the taxpayer in this case is producing a milk product, we're able to look at including not just the price of the product itself, but also the price of the silage and the feeds and all the other feeds in the diet itself. So that could be a perfect example of a project that we could take a look at that taxpayers could benefit from.
Perfect. And I guess, what would you say to somebody that is just doing routine farm management? Could you dissect that a little bit more to give us a better picture of that? Like, would manure management be part of that, or was that just be a routine farm management practice? Those type of things.
No, that's a great question. So I would say something like manure management is going to be something that is routine most of the time. There may be some different processes that people are trying out, and we could look at some potential R&D there, especially on the employee side. The amount of time that they're spending kind of working and figuring out if there's a new process that exists that could kind of improve their operations. That's something that we could certainly take a look at. But I would say that if any dairy farmer is kind of thinking, what I'm doing is routine all the time, I would say that to double click on that word routine and try to see what's actually going on. Are you using different ingredients that you haven't used in the past, right? Is your source of ingredients kind of being mixed up? Are you, trying tomatoes one year and the next year you're going to try other types of vegetables to include in the feed, right? While these activities may seem routine on their surface, there may be elements that could be qualified for this credit.
Okay. I wanted to go a little bit now into the experience that I had on our farm. So I've done several different experiments that I've gotten R&D tax credits on, and just wanted to talk a little bit about the process and what that looked like. So the I guess key piece of advice that I have for listeners, that if you're looking into this, make sure you're documenting things well. Like I used my accounting system. I've got that set up really well, keep track of all my expenses. And so we can separate out what expenses were associated with the experiment very easily. And then also keep track of the dates of when the experiment starts, when it wraps up. It's not always ongoing for years and years and years and years. It's got to have an end date, I think, right? So those are a couple of the key ones. I really appreciated the help that I got from the gals that work with you in the office there. They really helped give me some guidance on, hey, these are the things we're looking for. If you need help, we'll come on. And we did a virtual call, we dug out the information that we needed, and made the process very seamless, because I never would have been able to pull this off on my own. So I really appreciate the help that you guys gave me around that, and just really did a good job of explaining that for what we did on our farm. But it's also, you can look retroactively if you haven't done it before. Is that correct?
Yes, that is correct. You can typically look back up to 3 years on the federal side, and then in some particular states you're able to look back 4 years to this benefit.
Yep, I know on our system, I talk about this a lot on my podcast. I have lots of data, and I keep that for records. So I had all of the data to show what we did at the beginning, and what the baseline was, and what impact the specific trial had on what we were trying to accomplish. What type of information should producers and anyone looking at R&D tax credits have to show, like, hey, this is what we did, this was the outcome?
I would say that to anyone listening, try not to overcomplicate it is my first recommendation. I would say that whenever a change is made, kind of write down what you believe is new to the change, right? Is it a new ingredient? Is it a new product that you're trying? Is it a vaccine, right? And write down what your goals and objectives are. And then making sure that over the next few weeks, kind of take some notes and follow up and look at, body composition or whatever metrics you think are going to be changing with the herd, and just kind of making note of what those things are. And then finally, over time, right, as you kind of have these, maybe like a weekly notes log documenting the results of what you're finding, that's going to be super key for R&D credit qualification. While it's very, very key to make sure that that's being done, overall, it can be super simple, right? Just have a Word doc where you're kind of writing these things down, making sure that they're timestamped. And that's going to be huge.
Yeah. And if I just build on that, Sid, so I think that's why it's very important for businesses in agriculture, farmers, to work with a consultant who can obviously break down the tax code into their language, and obviously make sure that the activities and the costs that are being claimed are eligible, and obviously make sure that you mitigate the risk of any IRS audit or things like that. Typically, farmers aren't tax experts. There are many CPA firms out there that have a really good understanding within the ag industry, and I would always encourage farmers to get that advice from a third party, just to fact check that what they're doing is qualifying R&D work, and make sure that it's well documented and you have measures in place to mitigate the risk of audit.
Yeah, and I know, like, for my accountant, they weren't comfortable trying to get into this themselves, so that's why partnered with you guys to make it happen. And that's probably pretty common. I'm guessing a lot of just normal tax accountants that farmers work with aren't typically diving into actually doing the work of putting this together, right?
Correct, yeah. So CPA is amazing when it comes to the finance. The big part of this credit is obviously the technical understanding. So it's about understanding how, routine work within row crops is or isn't research and development. And to understand that, it needs to come from a technical viewpoint. So someone with experience within the industry or working with similar businesses. And typically that's where CPAs don't feel comfortable giving their opinion on, as they're financial and not technical.
Yep, that's a good point. So Sid, we talked a lot about feed trials on farm. What other type of avenues of research and development should farmers be looking at and thinking about?
Yeah, absolutely. So every dairy farmer knows that in addition to milk production, there's going to be an entire breeding aspect, of course, with all of these, that kind of goes hand in hand with these activities. So just overall, the expenses associated with that, if you're trying to develop different pedigree stacks, you're trying to go after, a complete genetic stack that is going to be able to meet your different yield production, be a little bit more resilient from a health standpoint. You're going to be incurring lots of costs with these sorts of things, right? Semen purchases, sire purchases, and all the different testing results and whatnot, all these labs that you're going to be sending things out to, as well as even potentially some of the on-farm folks that are managing the breeding process and the joining and all of those sorts of things. There's definitely stones to uncover in that area as well.
Okay, great. I appreciate you going through the farm section there. Let's shift a little bit. We do have a lot of ag tech folks that listen to this podcast as well. So let's shift into the ag tech side. For founders building hardware or software in agriculture, where does this credit most apply? What should they be looking at?
So yeah, from the ag tech side of things, there's definitely a lot of different R&D, a lot of different things that have been going on. We've talked to several folks in the industry. Some people, for example, kind of developing different algorithms for the camera systems that are in the farms, and these cameras are actually able to pick up and measure and quantify dry matter intake. They're able to analyze body composition of the herd, right? Kind of do some of those things that more or less folks walking through the barn would sort of be achieving. Interestingly, the clients that we have worked with, it's not necessarily an either or thing. Like, we're going to use the cameras to get rid of the people. But they found that using kind of both at the same time, they're able to make sure, that their data is of high quality, and that everything's performing well. And then also, obviously, on kind of the mixing side of things, right? There's a lot of technology in the feed mills. There's a lot of technology on the different TMRs and mixers, and making sure that those are kind of modular enough to kind of move around the farms to different, growing sites for silage and that sort of thing. Different milking sensors, RFID tags and things that are applied to the farms. There's also different ways, depending on what part of the country that you're in, that you can kind of irrigate your silage, and that's kind of really big projects. If you're, kind of in the Southwest and some of those drier areas, that becomes a little bit more important. So I would say that that's another big area as well.
Yep, perfect.
And I think when we're speaking with farmers, yourself in particular, Paul, what we found is that there's a big shift in agriculture where farmers are moving away from instinct-based decisions and moving to these technologies which are allowing them to make data-driven decisions. Now, obviously, traditionally, a farmer might be adjusting feed, breeding, or crop input based on what they've learned over the years from their family, from the generations gone by. And there's these new technologies coming into the market which are amazing, and they are very, very R&D intensive, as Sid mentioned. So the sensors that monitor animal health, maybe drones which are assessing crops from satellite images. Maybe there's ways that people are incorporating AI. Now, these businesses will be doing a lot of research and development, and typically what we find is that at the startup phase, they believe there's no utilization for these credits because they're not paying federal income tax, because they're pre-revenue, because they're not profitable. Now, businesses can still use the R&D credit if that is the case. And if you're under 5 million in gross receipts, and if you're under 5 years old, then you can use the credit to offset your payroll taxes instead. And a lot of the time when we're speaking with these businesses, they think that it's used to offset your federal income tax liability, so it's something to look at in the future. Whereas in fact, it can actually be a useful tool early on in the journey of the business and used to generate additional cash flow, which can go into further R&D and innovation.
Yep. No, that makes a lot of sense. So besides looking at the payroll tax offset, what is the actual financial impact of the credit look like against your federal taxes? How does that work? What's the timing of that look like?
So the way the credit functions is actually fairly simple. So company A performs qualified activities. that company will generate a tax credit, which is what we've been talking about. What does that actually mean in practice? It's a form that is attached to your company's tax return. It's one form, and it details out what the expenses you're including are, and then it also details what the total credit is going to be. The way it works mechanically is that that credit passes through your tax return and offsets the tax liability for your company dollar for dollar. So if your company owed $100K in taxes for 2025, and there was a $100K credit identified, then that would wipe out your taxable liability, more or less.
Okay, that makes a lot of sense. Pretty straightforward.
I guess one other thing to add to just to include on there too is that companies that are pass-through entities, where let's just say, we know a lot of these are family-owned businesses, and maybe, there's like 5 or 6 family members that own the business. The credit will go to the different owners in direct relationship to their ownership percentages. So that's kind of the way it would divide it up. So if you think mom, dad, and kids own company, well then, half the credit would go directly to the parents if they own 50%, and then the rest of the credit would kind of go to the kids into the proportions that they own the company.
Got it. Good clarification there. Another legislative piece in the U.S. that I wanted to bring up, I think back in July, the Big Beautiful Bill was passed, and I believe that had some impact on this as well. Could you explain that a little bit?
Yeah, the Big Beautiful Bill had huge impacts on the R&D credit, and they were all very, very positive. So prior to the Big Beautiful Bill, all companies were required to amortize their research and development costs. Kind of in the same way that you could think about property, right? You kind of realize the expense over time because it loses value over time. So the Big Beautiful Bill changed that entire thing. So before, you had to amortize your research and development costs over a 5-year period if they were being incurred domestically. Now for companies that are under 31 million in gross receipts, over the period of 22 through 24, they no longer have to amortize their R&D costs. They can simply deduct them in the year they were incurred, which is what we know every farmer likes doing anyways. So now farmers are able to go back, amend those returns in 22 through 24, and if they would like to, go back and claim the benefit in those years, deduct their costs as they were incurred, and also claim the R&D credit to offset any tax liability. So massive benefit. All of our clients have been very, very stoked about the change.
Perfect. Now, one more thing I wanted to hit, one area that I think holds a lot of people back from this is they're always like, what if the big bad IRS comes around, and even if I did everything right? So let's talk about audit risk. What does that look like if you put in for an R&D tax credit? And I know we talked a lot about this already, but what makes for a really strong and defensible claim?
I think it's important noting that, in terms of tax returns go, audit risk is probably less than 5% across the board, regardless of what you're putting on your return. Now, I would say that claiming the R&D credit does not increase your chance of audit, just claiming it on an original return. Amending your tax return is always going to increase your chance of audit, whether you're amending it to, adjust your revenue because something was messed up, or if you're amending it to go claim the R&D credit. As I said before, kind of about the R&D tax credit, the results of the analysis kind of pop up on one form of the tax return, right? And these forms are just attached onto the returns. So whenever there is an audit, right, most of the time the IRS is just wondering what you included, right? And that's kind of where we step in and we help the clients throughout that entire process from start to finish, right? Explaining what the qualified activities are, how the costs were determined, and what methodology was used to determine those costs. And part of our process is making sure that the right documentation is being pulled together. And we kind of explain, the cost benefit analysis with our clients throughout that process.
So that's one of the perks of working with a company that, like you guys, that really understands this and focuses on this directly, that they can probably have a little bit more confidence going into their tax return, that if they do get audited, the questions are going to be answered in a way that is going to make the IRS happy.
Exactly.
Yeah. And I would encourage everyone to make sure that that's a consideration when they're looking at these credits. What is the measures and the process you have in place in the event of an audit, if that happens, and would you be getting the best kind of support from your CPA or whoever you're using on it? And it's definitely a question to ask when considering what vendor to use for these credits.
Yep. Perfect. So guys, just taking a step back, I mean, you work with people in agriculture every day and what you're doing with R&K. What do you think agriculture underestimates the most about how innovative they actually are?
One thing that I find in particular when speaking with these businesses is they believe that it's just routine work that they've, done year on year, and they've learned it through their fathers, through their mothers, and just from the industry, which is the case a lot of the time. And a lot of the time, there isn't a huge amount of R&D, but typically within agriculture, with the risks that need to be taken to keep up with the demands of the market, the ever changing impact of the climate, disease, etc. There's a lot of R&D which can and does take place, and therefore lends itself nicely to this credit.
Well, guys, thanks so much for being on the AgCulture Podcast today. As we close here, what final things would you like to say about the topic of the day, R&D tax credits?
Paul, it's been great coming on. Thank you for having us. And yeah, it's been great working with you over the years. You've been super helpful when providing insight on this industry. We appreciate you and your support. And if any of your listeners, think that this could be relevant to them or have any questions regarding this credit, Sid and I are happy to take calls and to run them through whether it's something to look at or not. I'm sure you'll share our details in the description below, and happy to field any calls from anyone.
Perfect. And we'll put the link to R&K in the show notes here, but what's the best way to get a hold of you guys?
Email is best, or give us a call whenever. Perfect.
Well, Louie, Sid, thanks so much for filling us in on a topic that most farmers probably are interested in, but didn't really understand. So it brings a lot of light to the sector, and really appreciate that.
Thanks, Paul.
Well, thanks once again for listening to another episode of the AgCulture Podcast. I know taxes probably aren't the most exciting thing ever, but I've found a lot of value in understanding and learning about R&D tax credits, provided some very nice financial benefit to my farm, and I think it's something that the industry needs to hear more of and understand, because it is out there for us to take advantage of, make us more efficient in doing R&D work on whether that be your farm or in your ag tech business as well. So with that, I want to thank you for listening once again. Also, if you could share this with anyone you know, we really appreciate that. Would love to have any reviews on the platform that you are listening to this on. That's one of the ways that we can grow our audience, that moves us up in the rankings so people can find us easier. So with that, thank you once again, and we will see you next week for another exciting episode of the AgCulture Podcast.